what's up, everybody? It's your boy MIA, and today we're bringing you a roundtable discussion we had Sunday morning here at OTC. But first, before we get started, just a reminder we are live every weekday, 9 a.m. to 4 p.m., for all your stock market analysis, so be sure to check us out. And now, let's get right into our roundtable. All right, good morning, guys. We are 1 month into 2023. A lot has happened, and I have some I know they don't like to be called experts, but they're all experts in their own unique way here to talk to us today. And the first thing we're going to be talking about is what has happened so far. 1 year in, some massive gains. Uh, what I'm going to do here first is kick it to the legendary Birdie Hunter and get his take, and we're going to go from there. Birdie, thoughts on the year so far?
Hey, good day all. Thoughts on the year so far? I see a repeat exactly of what happened last year. Big pump on some major stocks to get the indices up where the hedge funds need them. We saw it particularly last week with out of the blue a huge rise in the price of Apple. And I saw exactly the same thing happening to the most expensive stock on the Amsterdam Stock Exchange that's called Adyen, a sudden rise of 13% on the day, where there's no news on that stock, no earnings, nothing. And that all combined with the slow rise of all the meme stocks in January. So to me, it looks like the big investment banks are trying to keep their margin accounts in balance. That's what they're doing. But I do expect a large drop because there will be a day pretty soon in my agenda that they lose control and then it will drop. And this is exactly why I am in SQQ calls, AEX, Amsterdam Stock Exchange puts, and I still am long on the meme stocks, AMV and GameStop. Next to that, I'm very long out on HYMC, the gold, because I expect the gold price to rise when the dollar weakens. So this is my point so far after 1 month trading in 2023.
Okay, so you're seeing a lot of similarities from last year. I think that's a very valid point. Beautiful. All right, next up, the wonderful Diane B. Thoughts so far, Diane, on where the market's at this year?
I have to agree with Birdie. It is very similar to last. I'm all in the meme stocks pretty much. I do play day trade occasionally. Um, but in looking at AMC, Ape, GameStop, and about let's see, Upstart, I'm looking at these stocks and they're showing the same patterns as last year. People are figuring out how they're kicking the can, where they're hiding things. And I have a feeling that once, if there's one shakeup in the government or one hiccup, or not in not the government, but within the market, that we're going to see about 1,000 different stocks go running. I honestly believe that. I'm just waiting, literally, for that to happen, for the hiccup and my portfolio goes completely green and out of this world.
What stocks or
The
what type
stock,
of stock?
the stocks that are highly shorted. You know if you go to Upstart will be on Reg Show Monday. They do hit Reg Show, and then there's a pattern of things that happen. I don't know. It's behind the scenes. People are trying to figure it out. But there's people who I follow on Reddit, and Twitter, whatever, and other stock market people who are figuring out the patterns and the kicking the can. So how people say like they never covered the shorts. The theory that I'm believing is, yeah, they covered, but they did it by creating new ones. They may have closed that one, but there's still another one open. So we're just seeing, that's why we haven't seen a quote unquote MOAS or, and these runners that occur and then get stomped out are just them covering what's due today and kicking the can down the road so they're not in trouble. And I don't think um, we're going to see a complete collapse. My best guess is that like the SEC and the banks that are and everything and even the Fed is trying to like, how do we do this without really destroying the system? That's what I feel is, and hopefully this year we'll see the system correct itself in a way that you're not destroying the economy, but the memes are going to make money. That's what I see.
Okay. Appreciate that. Right to our very own Enzo G.
What's up, baby? How's everything?
Great.
Good morning, guys. Yeah, I mean, I'm no stranger to telling it how it is, and I mean, if you're gonna tell me 4 months ago that the SPY was gonna be back over 400, we were gonna be running green out of Christmas, fair. If you would have told me that we were going to go into February green and be hauling ass, no, absolutely not. I think that it kind of set everybody up to continue to think, oh, we're in a recession. Yeah, we're still in recession. We're still having problems. We're still having high inflation problems. We're still having issues with people paying their bills all over the place. But they want to continue to keep pushing the narrative. I recently, which was what it was, Apple this week that decided to go and have the first time in 11 years bad earnings, and it flies. I don't understand that, and maybe somebody can go and give me a better understanding of why Meta, Apple, things that didn't necessarily do very well ended up going and just flew in value last week. But going over just the overall market, I think it's kind of strange how much support we're holding here at 400 or over the 400 mark. I would love to see a correction, like Miss Diane B was saying. It just does not feel right. It feels like something's propped up. It feels like there is Nikki D had gone and sent me a picture. I feel like a little twig holding up a giant boulder if you're looking at it from market perspective right now.
Yeah, I have to agree with that. The only thing that I would say that is a common denominator in Apple, Meta, things like that is the potential for AI to be very profitable for them. We've seen Meta with them making the announcement of the AI targeted ads and things like that, and it's a whole different conversation altogether. But just with ChatGPT and that being out there, AI is such a focus right now. But I think we'll get into that with question 2. So we'll keep it rolling here with the Mr. Germ Corp joining us from on the other side of the world, as I like to call it. 1 year in, Mr. Germ Corp. How are you feeling? And thank you for being here, my friend.
Yeah, no, thanks, man. I'm feeling good, thanks. My take on it. The start of this year, it's been a case of event after event after event, and things still getting kicked down the road. The can gets kicked down the road. You've had the crypto thing, those market halts, which was something else, right? They've still not, come out and told the truth about that. There's been no explanation for it. That's been pretty horrific.
And real quickly, Germ Corp, I hate to interrupt you, but you having been in the game for so long and seen so much, have you ever seen anything like that morning with those halts?
Nah, I've not, to be honest. Yeah, and sort of the American market annoys me a lot because it doesn't really happen over it. You know, you get them in sort of in big moves in the other exchanges, but they seem to be quite, you know, they're quite happy to hold so much stuff. It really doesn't give me much hope, to be honest. Yeah, sort of you know, going down the road. If I'm looking at it and thinking, well, they just do this all the time. And it's like a real kick in the teeth, that, you know. So somebody does a run and then they halt it. Kind of annoys me. The only other time I saw it was years ago in Hong Kong, when they actually shut the Hong Kong Stock Exchange, and that was the '87 crash. And they later jailed the the securities chairman. You know, he was up to other stuff, but that was part of it. Basically, he got jailed for doing it because they just shut the market down. So yeah, that's the kind of only other time I've seen anything like that. You know, I know it happens, but it just seems to happen, you know, very frequently in the States. So yeah, so it's just been events after events. You know, the other thing has been you got the debt ceiling. Okay, that probably doesn't bode too well for the dollar. Okay, and at the moment I think the dollar's everything. You know, you see the dollar comes off, then you see commodities going up, gold, etc., Bitcoin. So that's something that I'm watching, to be honest. Yeah. Other things, what do we get? And the latest one, this one with Adani, you know, Adani, the Indian company, and it was Hindenburg Research came up with this, you know, this 100-page essay that they did, basically saying that they're a con. Hindenburg, they basically short everything, right? So they hit this. Now the knock-ons for this one, you've got like Credit Suisse, they're big creditors to them, right? And Citibank, and they've actually said now that they're not accepting any of Adani's stock or bonds as collateral for, you know, for as margin. So, you know, event after event, and then also the cost to borrow on AMC has been something else, hasn't it? You know, that's been up 1,000%, and you know, like a few months back, 20% cost to borrow would have been a headline. Now it's 1,000. Okay, FTX tokens, tokenized AMC. Maybe that, you know, that explains that. So yeah, it's kind of event after event, which I kind of find interesting, and then that this market is still getting bid up. I think I agree with Bertie about the hedge funds taking the Fagoon stocks, as I call them, you know, Facebook, Amazon, those, pumping them up, basically to cover their, you know, their margins. Basically, that's why things going on there. Yeah, I guess the AI sort of element in there is something else. So what am I looking at? Yeah, I'm always the perma bear, as you know. So basically, I'm long SQQ. But that's always been a hedge against the memes, to be honest. Yeah, and what we've seen lately has worked out nicely, so that you've got the memes going, you know, getting short squeezed somewhat. SQQ has got hit, and it's worked nicely for us, you know. But I'm still long SQQ, and I'll still go long even more, you know, because I still think that there's going to be a hit somewhere down the line. So yeah, that's my take on. It's been an amazing start to the year, I'd say that.
I have a question. Going back to your comment when you were talking about the Hong Kong '87 crash.
Yeah.
Can you elaborate more on that situation? That seemed extremely interesting to me.
Yeah, well, I think because wasn't the 19th of Friday? You'd have to just check it out, basically. I'm pretty sure sort of, yeah, it was Black Friday, I'm pretty sure they called that. What was it, October 19th, was it, 1987?
October 87?
Yeah, I think it was October the 19th. I think that was a Friday. So basically, you know, obviously the Hong Kong market had the weekend to think about it, and they just decided, well, we're not open.
Okay.
Yeah. So you're stuffed, right? You know?
That's okay. That's very strange. Okay. I appreciate that. I'm gonna actually do some more research. That's very weird. Why they just decided no?
Yeah.
Any particular reason?
Tonight, that's Ronald Lee, but he's dead now. He was the securities chairman, and a couple of years later, he was put in prison, and they did cite some of the honky exchange things as reasons for it.
What your expertise in that? How did they get out of it?
Well, I think they just got so much pressure, and of course the markets as well. Sort of, they all did they correct? Yeah, they kind of corrected themselves. But what the Hong Kong market just didn't do, they wouldn't allow the positions, for people to get in or out or whatever. So they waited for the other markets to calm down before they went in. I mean, look at it. How would you feel if you had a position on it and it wouldn't open on Monday? You wouldn't even get a chance to get out of it.
Well, I mean, we saw that when the buy button was taken away. I mean, you were able to get out of your positions, but your freedom was definitely. I could see your point.
Yeah.
So that's cool.
All right, so the Perma Bear Germ Corp, appreciate that. Moving right on to my main man, Nicky D. Nicky D, thank you for being here. Thoughts on the market so far this year?
Hey, so it seems like I am a little bit less bearish than most of us here. I'm just sort of looking towards the next CPI report and the one after that, because I think if inflation does continue its slight downtrend that it's on now, I do think the Fed will continue pivoting. We sort of saw that in the most recent meeting where they took out some of the language regarding the supply chain issues, took out some of the language regarding the war in Ukraine. And I think that if inflation continues down, we could see this rally extend itself. Obviously, that is pretty dependent on the data, but I'm sort of just playing it patient and just waiting to see what happens. I definitely have some SQQ positions, but I do think that there's a possibility that we do see a bull market in 2023.
Okay, I like that. And do you think that the gridlock now in the House and Senate is a lot more helpful for that we don't have to really worry about spending as much on that end?
I definitely could see that playing a factor into, inflation coming down, less spending.
All right, I like it. Quick and to the point, my man Nicky D. Appreciate
That's
that.
pretty much it. Also, one other thing, I believe that the same exact thing happened with the stock market being completely halted in Russia following the invasion. They basically did the same exact thing. They just shut down the market for, I don't know if it was 1 week or 2 weeks, but it seems like a common trend of certain type of governments. I hope we never have something like that happen with the American markets, but those halts that one morning definitely was a little bit worrisome.
Yeah, and if
Has
you
anybody
go ahead, Enzo.
I'm sorry. Has anybody ever seen that? We have probably 50 plus years between.
Well, the whole market's been halted, but like before. I know that during
I see that,
the
but
housing market crash, stuff like that, during the .com crash, I think even like that, the whole market got halted. You know what I mean? Because it was, but that's a whole market. That's not that's understandable, but I can get that. It was the
it
individual.
feels like not everybody's getting screwed.
It was what stocks were halted. The fact that AMC was one of them, it mixed within a bunch of blue chip stocks that I've never even seen one of those individually halted because they don't move that way. Even when Meta went up 25% recently, it didn't halt at all on the way up. Those stocks just don't move that way. It's not there. You don't see that. So I think, Enzo, you see, people seeing our reaction live of what was going on. I've never seen anything like it. I've been, commentating on the market for 2 years every single day. And not that that's a long time to be in the market, but it's a long time to be watching tickers consistently all day, and never seen anything slightly like it. So
No, I think you were dead on whenever you had said the only reasonable explanation that I have for that that you gave me was people are assuming that hopefully after 1 out of 11 years, you're assuming that maybe this is the one time that you're going to miss, that it's just a kind of a situation that wasn't supposed to happen. Earnings were bad. Okay, great. But people's sentiment and the reason that the stock starts moving was because maybe they were thinking that wasn't going to ever happen again.
Yeah, as far as Apple goes, I think that was the case. I mean, the Apple's still the biggest. I'm not sure if one of those other companies has a beat, but $2.5 trillion market cap, like Apple's not going anywhere. So I think people seen it as a cheap buying opportunity. But I also think what Germ Corp and Birdie said. I think they're pumping these stocks up to cover their margin accounts. So
right. But because they're also moving those, what's interesting is that if you'll look at it just as even a thought back to everything that is back at levels that we have seen before, the things like the meme stocks are still pushed back 50 plus from where they were, if not more.
Oh yeah, and a lot of these other stocks are still down. Even from the beginning of the year last year. So yeah.
But it seems almost like the memes are almost more so, I guess, restricted or spring loaded, if you will. Because it seems like you saw the chips run last week before. Then now you're seeing everything, pretty much everything run, except for the memes. Like they've gone and gotten a little bit of progressively upward movement, but I think those are ready to go. Like Diane B was saying.
Well, let's see what our good friend Randy Trader thinks about that. Mr. Stogner, good morning. Thank you for being with us. Thoughts on the market, my friend?
So I'm going to take a little bit different perspective slightly. I'm actually surprised the market thus far hasn't pumped higher. I believe that between now and the end of March, you're going to see a run into the 420s, possibly 430. And by the end of March, that's going to drop off. I think you're going to see a dip by the end of March, and then it's going to pump back up, run mostly a channel in the anywhere from 409 to 415. 415. And it's going to run that way, and you're going to have days of good trading, some bad days, until you get to end of the third quarter, or near the end of the third quarter, and those interest rates start really impacting earnings and revenue for the big players. Then you're going to see a dump. There's a narrative out there that the recession's going to come later in the year, and that's being pushed. Right now, you have hedge funds trying to make as much money as they can until it actually falls, and you have cooperation from the SEC. I think the game is rigged. The SEC is intentionally putting these halts in place, being a little over exuberant on the halts to keep things from running like Volkswagen did back in the day, and to keep from harming the big hedge funds. When you have former head of a hedge fund running the SEC, this is what you get. He is not a nonpartisan player. He still has ties there. He has connections. He's doing things to help his cronies. I think Nikki's right. There's going to be a push. It's going to go up, but eventually the interest hikes are going to start impacting. Even with Powell the way he did this last press conference and the narrative he was using, to me, he was neither dovish nor hawkish. But you have to listen to what he was saying, read between the lines. He's trying to preserve the market and to let it gradually grow on the pace he wants it. And which that's kind of his job, right? Is to preserve the capital of the country as a whole. If the market rips too high, he knows it's going to fall really, really, really hard. But he hasn't ruled out a higher interest rate. The way he said things, he's basically saying we're going to see how it goes. We're just going to see. He's trying to be neutral. And as a person, as a monetary and fiscal person, he tends to be moderate. You know, he's not an extremist one way or the other. That's just his character. That's his nature. But he is being pressured by the current administration and the White House to keep things where they're more to the positive. Now, they can have a big rise and they can have a big fall this year. They can't do it next year. Or if they do it next year, it has to be in the first quarter because elections will be coming.
Yes.
Now, you know, when it comes to the place, I'm looking at tech sector for two main reasons. All the issues going on with eggs and meat products, the artificial foods, I think are going to do better. I've called out Tattoo Chef because they seem to be getting more traction. And AI, I think AI is going to be a big player, and you're going to see Amazon, due to Amazon Web Services and Google, really profit off of that. People are going to, any company that's going to do it on a large scale is going to need servers for that technology and that process. And I think small caps going to do good this year. Just got to know which ones, and you got to be looking for them. I think some that are highly shorted are definitely going to run, but they're going to control them. If they don't, you're going to see more hedge fund failures. We had how many last year in the past year and a half? 2, 3?
Yeah.
And, you know, the head of the SEC, if it's competitors and he doesn't like them, they're not his buddies, they're going to be the ones to go.
All right, guys, that is it for part 1 of our roundtable discussion. Look for part 2 coming soon, and we will be doing this every Sunday morning live, so stay tuned for that. Make sure you have your notifications on, and be sure to check us out Monday through Friday, 9 a.m. to 4 p.m., live, giving you all you need to know in the market. Thanks, guys.